Hey everybody, welcome back to the channel. I want to go over the AM Silver Bullet on Tuesday, June 27th. We're going to go candle by candle, and I'm going to show you how you could have traded this session. Now, if you recall from ICT's videos that you could use sessions, different sessions for liquidity targets and liquidity purges. So this is right here is the Tuesday's London session he gave in his video. It's the London session from 2 a.m. to 5 a.m. He said mark out that time and extend the lines. And here we are on close to the AM Silver Bullet session, and we're kind of in the middle here. We're starting right here. So if it takes out this high here, then we'd be looking for a reversal. If it takes out this low here, we'll be looking for a reversal to go up to the other line. Okay, that's how he traded it. That's what he said, so that's what we're going to go with. So I have this marked out. That's what these lines are right here. So let's see what we get here. Dark gray is the 10 a.m. start of the session. So here we go. Let's see what happens here. I'm waiting for it to get out of the middle. Okay, right there, it took out sell side liquidity right there, and the session here, which is what we're really aiming for, but I'm just marking this low right here to show you that where liquidity is at. So it was just taken there. Now we're looking for some kind of a reversal. Okay. All right, well, there's a fair value gap right here. Let's mark that on here. Fair value gap. Comes back in the fair value gap, I will buy some there. It took out this short-term high right there. So if it comes back in, I would take that trade right there. Let's see what happens. Okay, there's another fair value gap right there. Comes into that, I would take an order right at the beginning of that fair value gap. I would have got in right there. Oh, okay. On TradingView, since I have to buy, I can't put a limit order. I'm buying right here when I should be buying right here. So that is, 2 points. That's $100 difference. Okay. But I'll buy two just to show you, for the sake of discussion here, how what's going to happen here. Ideally, I'd be buying there, so I'd be buying there, and here's my long position, so I can show you where it would actually be at, not up here. Why are we targeting this? Well, that is 8.5 handles, but ICT said if we take out this low of the London session, we'd aim for the high here. Well, the high here is this, but I also see this candle here, and I see the in between the new week opening gap. So my drawn liquidity would be this high right here, which is also in the new week opening gap. So it's just, I'm targeting this area right here. So I just put this high. So that's what we're targeting. And I also want to see this is a order block right there. So I'm going to mark that here. It's now left it. I'm waiting for it to be respected again, and I'll take a trade. On this trade, since I got in here, my partial would be up here. If I actually got in right here, that'd be about 60%. So I'd mark out my partial. So I need to have a candle close above this. I will take one contract off if I get a close above that. Okay. Now if it comes back in and respects this order block, I'm going to buy another 2 contracts. So hopefully I change the number down there. See what happens here. Okay. Close there. So we can get one that closes just a little bit closer to it. All right, I'll buy 2 there. Just show you, I'm buying 2 there, and my position would still be the same drawn liquidity. Basically, I got 2 orders at the same spot now because of TradingView's system. I'd still be taking partials here, so if candle closes right here, I will take 2 contracts off. and leave 2 for the full take profit. So let's see how it goes. It is respecting that order block there. Okay, that's good. Now if I had a limit order, that would have taken it out already right there, but because of trading view system, I gotta have a candle close above. I'm not gonna get out right here for my take partials. Alright, that is above, so I will sell 2 contracts there. I took my partials there. My stop is now break even. Okay. So let me just put this back here. Let me just show you where so mark this like this, and let's put our trailing stop. My trailing stop now would be just above break even, be right there. So this one would be break even. This first one, which was down here, would be break even. The second one, I'd probably take partials above here actually for the second one because it's higher. So let's mark that partials at right here, which is pretty damn close to the top. So I'd actually take my second one would be there, pretty close to the top. I might trail it above when he closes up here more. Might be another candle away and I might take partials, but the first one's here, the second one is still where it's at. So they're both where they're at right now. My trailing stop for my first one is here. I'll move the second one when I take a partial. But right now it's right below the order block. Well, it might take me out here. It might be break even. It's good. Again, that would have taken me out if I had a limit order there for my partial right there, and I would have moved my stop up. So let's move this both up to here, to right above where I entered, which was right here. So let's go 1 tick above. Now they're both at break even, and one's in more profit, the other one's break even. So if it comes back down, I got to close both. Oh, I need a candle close here to close one contract, because I have one contract from the first order still open, and then one contract from the second one still open. Because I took 2 partials here, should have only taken 1. But right now it's should be right there. Let's see what happens. And I'm fine. If it came down here and took out my stop, I'm perfectly fine with that. I've already taken partials. I've already got some money banked. I'm in profit or break even, so I'm fine with that. Take me out, that's fine. Alright, that would have taken hit my take profit. So I actually need to close both contracts. And we're out of the position right there. Okay. Let's see how the rest of the hour played out. Alright, there's your AM session Silver Bullet session. But I want to show you that this order block gets respected 1, 2, 3, 4, 5, 6, 7, 8 times right there being respected. Let's see how this next goes. It comes back down there. It just tapped into this new week opening gap, so it's coming back down. See if this order block holds. To the tick right there, where it holds. And then it goes back up. Does it take out the high? It does right there. So we got both of our sales right there. You could have entered right here with a long position right there. If you were still trading, your draw on liquidity would have been there, and you could have got out right there. Didn't take that in our calculation because it's outside the Silver Bullet session, but I wanted to show you what you could have done still before noon. So it's still tradable. It's just not in the Silver Bullet hour. But the order block was still respected, and you could have taken an entry at that order block and aimed for the highs right there, and you would have got it just fine. So there are your 2 Silver Bullet session trades and a trade after the AM session Silver Bullet but before lunch for a total of $1,075 in profit.